3/23, 2014, 10:26 a.m. March Madness on Amazon is in play. So, when Amazon came down here, we were looking at going long over here, and we did. And it put in a bottom base right here, and then continued to rally right up into that major resistance level. And that on Friday, Amazon had a big reversal day. So let's take where that was a big gap down on the earnings. This was the bottom that we're talking about. I'm going to draw a lower trend line there and whatnot. And I'm going to go right here. And that's on that daily. This was a bottom, a classical bottom. It took quite a while to get that down here. Then from that point here, we did the following. We had a nice rally in Amazon from these oversold conditions. From that low, where we originally owned it down here at 343, we rallied right up here. The date, 3/13. March 13th, we were at, believe it or not, 383.11 pennies. Then we kind of consolidated and we kept going up here on this daily chart, which at that point the high was 379. The reversal high, 379 even right here. So on Friday, we did the following. We had an open of 371 on 321. We had a high of 372, but check it out. We went down to 358 to the low, and it closed at 360.82. And what we're going to say about Amazon is it's a short sell on any movement higher now, because this whole daily trend is that, yes, we were above the 50, we were above the 100, but the 50 has crossed over the 100. That's a death cross. So what we're going to be doing is that the 20-day simple moving average, the red line right here, is still pointing up. And that value is 367. At the 20-day simple moving average, the 10-day simple moving average up there is 371. The 50-day is 371. That means that any movement up, and you got a 40-day, which is 364, crossing and going down the 20-day. This particular distribution day is I'm going to draw a trend line where we will get short Amazon, and we'll be very aggressively at doing that. This particular low on 312 right here, that low, let us not forget the high on 312 was 371 and the low was 363 on this particular bar right here from that 5-day pullback, and a nice upside move occurred. Why is the stock going to be looking? Look at when we gapped slightly down below these daily simple moving averages, Amazon for the bulls is in trouble, and that includes us as well. So what we're going to do is that when we come out of Amazon up at resistance, we're going to be a very aggressive short seller to balance out our trade, and that we could not hold the movement that we could not hold on Amazon. Remember, Amazon had a fairly decent range, but once we got up here above the 100 and the 50-day, it was looking very good for Amazon right up here. But because of the Friday distribution, it has changed things. So what we're going to be looking for on Monday is where we would be very aggressive short sellers on Amazon. I also want to cover one thing else on the daily, is what we call a moving average convergence divergence. I mean the MACD. So when we take a look at this down here, we are about to hit, now that reading right now is still positive 0.8, but very little before this thing goes into a, if it goes into a daily sell signal, then we're going to be super aggressive selling short Amazon. That means that this indicator that the public looks at and the high frequency model looks at is that 3 days ago on 319, that daily buy signal was positive 2.0. Then it fell to 1.7 and now declining to 0 dot or zero point 0.8. That's the blue bar here. So let's go back over here and say one thing. From its post earnings over here and this bottom and this breakout is it had a decent rally from here to there, and it did. However, it's in trouble. And I'm going to draw another trend line, which would be right here. This was a 3, 4, 5 day area. This is where we put in that bottom and we gapped up. That's ultimately, believe it or not, another support level right around 354. So any upside to Amazon is an aggressive short sell. It's not a buy sell because we broke. Once we rallied up, unlike 2013, we couldn't hold those daily moving averages. And they've gotten worse mathematically. They're declining. So we're going to be looking at the put options. Any gap up, we're going to sell short aggressively on Amazon.com. I will be doing the call and put options on Amazon. And as to what those trades look like and why would the put options pay extremely well on Amazon, because Amazon has a reversal. That was a big drop, 372 to 358. What does that mean? Very short term, it's oversold now. And when we take a look on a 60-minute chart, let's just take a look at Amazon, AMZN on 60-minute value. We are down here. This was the 60-minute reversal on 321. Now, having said that, on the 60-minute chart, on a very short-term basis only, we are oversold, meaning that on this 60-minute, we are minus 3.3. That MACD level is down there at a very short-term oversold position. Not only that, the percent DS is only 10. That means that percent DS on a 60-minute, when we were up here, that percent DS at that point was 48.75. This was a perfect snapshot of that 60-day. What we had going was a triple witch in the options, and Amazon puts are inflated, and in the short macro environment, the calls are deflated for an entry. Having gone over this daily chart with you right here, these are the daily moving averages on a daily. But looking at the 60, when we trade back up there, I think I said it was 367 is where that resistance level is going to be in the short term. Any rally up, we are broke. If we go into a daily sell signal on Amazon, that's a daily one, but the 60-minute one, it's just a trade up and then resistance, we're going back down. And that is the end of the story for Amazon. That means that we're going to change up from a 60-minute level now, and I can say right now, I'm going to show you again that this was the high over here. And we know that was 383. And at that point in time, we had a 60-minute buy signal and whatnot. Then on 319, it started to slip, but not much. It was 321 where we got that last big sell down. So when we take a look at Monday, we're going to do the following. We're going to be taking a look at where the call side is for a trade. And what I'm going to do here is that on this 60-minute from that top right through here and that lower horizontal line is support. Just remember, it's a trade to resistance and an immediate short sell right away. One of the other things we're going to be looking at right here, right now, is we're going to be looking at the $365 put option, but most importantly is the 355 call option on this 60-minute chart, which means the following. The calls are down here. They were up here, and it's, remember that these were in the money, and I've shown it on a 60-minute level. So when we take a look at the 360 call, which is down here, it was at a high of 30. We're down here at $18 on that call side now. And that's those calls up and out of the money now. And that when we look at the volume of this $350 call, it's in the money. It really doesn't matter. We're looking at the call side. Now let's go over here and take a look at the put side. This is a put option right here that has peaked on Friday, 321. These puts went up into an inflated area on Friday's trading, and this was a call that was in the money, referred to as what? The 350 call, 360 calls. Now let's take a look at the 370 call. The 370 call, remember, MMTs, this is a very short-term trade now. That this side of the market on that 360 call that was in the money, if you go take a look, I mean, there were $24 up here. Now they're down here at $13. So call ratio, put ratio are imbalanced, which will also guide us in Amazon.com to go long. But then I'm going to say we are going to be an extreme short seller on Amazon. And that's the reason why the 60-minute oversold condition is a entry and an exit. However, when we exit this trade, I will tell you now, we will get net short anywhere between 1,000 and 2,000 shares, because all of these minute period moving averages are declining. And depending on what that gap is going to be in the morning, we're going to be very aggressively. But let it know that the 50-day crossed over the 100. And then the 40 crossed over the 20. Yes, the 20 is still rising and whatnot. That's where that wall of resistance is going to be. And not only that, if we hit that sell signal, then it's all the more reason why we're going to get short. Just remember, we're overbought, and these resistance levels are going to be very, very strong for Amazon.com. We will take that trade short very aggressively on Amazon.